All right, let's dive into one of the most famous career moves in all of finance, the great escape from investment banking to private equity. It's a path so many people want to take, and today we're going to break down exactly why this exit plan is so incredibly popular. And that's the big question, right? I mean, investment banking is supposed to be the absolute peak. It's where all the sharpest minds are supposed to want to end up. So, why is it that after just a year or two, so many of these super high achievers are desperately looking for the door? Well, first, you got to understand the bargain every junior banker makes. You land that job at a top firm, and boom, you get instant prestige and a killer paycheck. But the price you pay for that is legendary. We're talking about an insane amount of pressure and work hours that are just absolutely grueling. So, for the bankers looking to cash in their chips and get out of that deal, there's one place that shines way brighter than anywhere else. And that's the golden ticket, the coveted exit opportunity into the world of private equity. This is the move. This is what everyone's gunning for. And this whole exodus really comes down to three huge motivators that private equity puts on the table. First, a much better work-life balance. Second, way higher long-term pay. And third, a job that just feels more fulfilling. So let's break down each of those. Let's start with the one you'll feel right away. Pillar number one, getting more of your life back with a whole lot less of that relentless grind. I mean, the numbers really say it all. A junior banker is pretty routinely clocking in 80, 90, even 100-hour weeks. But in private equity, that number drops to a much more human 50 to 70 hours. Look, it's still a really demanding job, don't get me wrong, but that 30-hour swing, that's the difference between having a life outside of work and not. And it isn't just about the sheer number of hours either. Banking is all about reacting. It's a world driven by client demands, which means constant all-nighters and last-minute fire drills. Private equity, on the other hand, is just more structured. It's proactive. You actually have way more control over your own schedule because you're the one driving the deals. Okay, on to pillar number two. And this is the one that really gets people's attention. We're talking about the path to building some serious, life-changing wealth. Now, to really get why private equity is so lucrative, you have to understand one key term: carried interest. It's pretty simple, actually. It's the 20% share of a fund's profits that goes back to the firm's partners. This is not just a bonus. This is the secret sauce. It's the economic engine that powers the entire industry. So when you're starting out, things look pretty similar. But the real split happens once you get to the senior level. A banker's pay stays as a salary plus a bonus, and that bonus often has a ceiling. But a private equity partner, they get their salary, their bonus, plus that game-changing carried interest. It's a totally different ballgame. It's no longer just a reward for your time, it's a direct stake in the value you're helping create. And the potential here is just mind-blowing. Our source material puts it perfectly, saying that carried interest can result in multi-million-dollar payouts from a single successful fund. We're talking about a level of wealth creation that you just can't get on the normal banking career track. But hey, this move isn't just about getting more free time or a bigger bank account. Pillar 3 is, for a lot of people, the most important one for staying happy in your career long term. And it's the huge shift from being an advisor to becoming an investor. This really gets to the heart of it. At the end of the day, investment banking is a service job. You're a very, very well-paid advisor. In private equity, you become a principal. You're not just giving advice on the deal anymore. You are the deal. You are the investor. You're the owner. Just think about what the day-to-day work looks like. A junior banker will pour hundreds of hours into perfecting these incredibly complex financial models and huge pitch books. But so much of that work is for deals that are just theoretical. They might never actually close. It's a ton of work, but a lot of it is just an academic exercise. Now contrast that with the private equity role. Your job there is to go out, find a great company, put your money where your mouth is, and then get in the trenches with that company for years, helping it grow and create real tangible value. You see the whole thing through, from start to finish. This one phrase just absolutely nails it. It's that huge, profound shift from being an advisor to an investor. That sense of ownership, of having skin in the game, is what so many people find so much more satisfying. So let's pull all this together. When you look at these three pillars, the lifestyle, the money, and the actual job itself, you start to see that this isn't just a career change. No, it's a complete professional transformation. At the end of the day, the great escape from banking to PE is all about this. You're moving from being a very highly paid advisor who's just passing through to becoming a principal investor who actually owns the decisions, owns the strategy, and has a real financial stake in the outcome. And that really leaves us with one final thought. If you strip away all the fancy titles and the industry jargon, it's a choice between two completely different identities. So the real question is, which role would you choose? The expert advisor or the invested owner?